A new report highlighting the state of real estate in New York City. Prices edging down in the second quarter compared to a year ago, but they're still hovering near record highs. Joining us now is Frances Katzen, founder of the Katzen Team at Douglas Elliman. Good to talk to you today. So there's some positive in here, some stability, hovering near record levels. What's holding the market?
Cash. And people wanting to take an opportunity to get in while there's a capitulation in the market for sales. And I think the cash component is definitely creating leverage amongst the sales because there's not a lot of mortgage deals taking place right now. They're very impacted by the rate hikes.
Frances, where is that? I guess who is buying? Because when you're focused on New York, obviously the average selling price in New York is extremely high when you compare it to what we're seeing play out in the rest of the country. So where is that demand coming from?
It depends on which area. I mean, you've got families that do need to upgrade, that do need to buy, and then you've got people who want to take opportunity while there's a lag in the market. The people that are buying are the people that have the means and the discretionary income to exercise it, to be honest. I mean, the outlier states are definitely feeling it. It's definitely flat for the spring season, but I think ultimately there are deals to be had, and I think that is basically what's driving it, and the lack of demand. We are down 20.8% in inventory right now. And that's the cadence that's holding it.
Going back to Seana's point, though, if you're talking about all cash offers here, I mean, are investors just kind of parking their money there?
It's twofold. I mean, I think the proliferation of cash is basically pushed forward by the lack of mortgage deals. And I'm not sure that it's necessarily more cash. It's just that the cash deals are becoming the prominent presenter. We're down on the cash deals anyway by 29%, but 65.4% of the deals that are closing are cash.
Frances, you mentioned
the average pricing, not the luxury sector, the averaging pricing right now is down at 1.2 million.
Yeah, but still 1.2 million, a heck of a lot of money, and certainly pricing out a lot of people who are looking for a home at this point. But Frances, you touched on something that really applies to almost everyone that is looking for a house right now, and that's the lack of inventory that is available. When it comes to New York, are you seeing any improvement along those lines, or what does the timeline for a potential improvement look like?
We saw a lag in inventory for April and May, which is usually a very strong season. And we're down for the first time in 11 years, year to date. So that's normally our big push for our inventory. I think that people were hoping to see more inventory hit during the spring market, but I think people are holding back because of the rate hike. People have to say goodbye to what they currently have, which is averaging 2.5% to 3.5% interest rates. And now we're seeing interest rates ticking just under 6% and a 30-year fix at almost 7+. So I think that's the big dilemma of why we're seeing such a shape of lack of inventory. And the big question will be after the summer doldrum and we're back into the first quarter in September, the quarter of September, what we're going to see in terms of inventory brought back forward. I think everyone's trying to time it.
If we're talking about this from an investment perspective, how does New York City compare with some other major cities? If we're talking about the luxury market, I mean, how much more upside is there to be had in New York compared to some others?
I think New York by nature is a hub for investment. I think most people want to park their cash in New York, London, and Paris. So I think New York's always got the upper hand in terms of desirability for performance, especially from overseas. As it relates to the outer areas outside of New York, I think what we're finding is that although it's flat, we're still hearing about bidding wars taking place in Connecticut or in Texas. LA is still performing. It's not as the boom years of 2021 and 2022, but I definitely think that if the unit's priced right in any segment, you're going to have a complete bidding war because there's just not enough inventory because of what I mentioned before.
Frances, what is all of this doing to the rental market? Because I've seen the recent numbers here out of New York City, and it's extremely expensive. Over $4,000, I believe, the average price for a one-bedroom. How, I guess, do you see the lack of inventory, the fact that that situation might not improve anytime soon? What's that going to do to the rental market going forward?
I mean, it's going to tighten it up. I mean, I think even in November of last year, we were down in inventory at 2.7%. Right now, inventory has been spotty because I think the entry market was trying to get in. But because the rates started to jump back up, people couldn't make the numbers work. And so even though it was a 40% increase on the average rent from COVID times, it still was inherently better than trying to take a mortgage as an entry market buyer because it was too high. So I think what you're going to see is that the rental market's going to sustain a certain amount of strength, which I think is frustrating a lot of people who've been priced out.
Frustration certainly in the market there. Douglas Elliman, Francis Katzen, good to talk to you today.
Thank you for having me. Bye.